Welcome. Today in this video, I'll be showing you guys the new most profitable strategy that I've tested on my strategy ranking spreadsheet. So I'm going to explain the strategy, show you guys all of the back testing results so you can see exactly how it performs, wins, losses, break-evens, and etc. So I'm also going to explain how you can improve the results of this, how you can modify it for your needs, because the way I show is just a basic, simple version. There are many ways that it can be changed, improved, modified. So I'm going to explain some of those things as well. But before getting into all of that, quick shout out to my affiliate exchanges. First, Bitunix, they set me up with a little event for new users who make deposits, get some bonuses. This is one that's allowing US customers and others that might be geo-blocked for other exchanges. So no KYC, no VPN. Here you can see it. They even put it on the little landing page here. So check that out if you're interested in a crypto exchange. There's also BingX Exchange. They set me up with an event as well for new users. Making deposits, you get bonuses, trial funds for different deposit amounts. And if you deposit, let's say the 5,000 USDT, you actually get the reward for that. This one, and this one. So you get all of the rewards lower than the one that you meet the criteria for. Read all the description down below for the details of it. Same thing with the Bitunix one. Just read all of this so you make sure that you're eligible. Use my links to get going on one of these exchanges. BingX is cool because they do allow Forex, Indices, Commodities, crypto. So they have a variety of different markets on BingX, but this one allowing US customers and others who might not be able to use BingX or Bybit, no KYC, no VPN. So let's talk about this strategy. I made a video yesterday. It's like 58 minutes long, breaking down this system and going over a ton of examples. So I'll go over some examples, explain exactly what I'm going to be testing so that you understand the results of my back test. And then I'll show all those results and talk about some things that you could change, improve, modify to get the results better. So let's get into the strategy itself. So this is a multi-time frame analysis approach. We have the daily time frame here on the left panel, and we're using the TradePro TCI. So this is a momentum line here. These are the settings. This one is a momentum indicator. You can change this one out with something else. So just a momentum based indicator that you could use for this higher time frame. And so the daily comes into play because we are only trading in the direction of the momentum on the daily. And then on the right side, I have the 4 hour, which will be our trigger time frame. So I'm looking for pivots in the momentum of the daily's direction to get a trigger for an entry. So I've kind of outlined the areas with these boxes. So this red box represents when the momentum was falling on the daily time frame upon close. So see this on the daily falling. You can see that I've outlined that in red on my 4 hours, so I know when to look for shorts only, when to look for longs only on that 4 hour time frame. Okay, so it makes sense. Momentum going up, green box, momentum falling on daily, red box. All right. So for the actual entry trigger, looking for a pivot on the 4 hour in the direction of our main higher time frame trend. And so a pivot is just when the momentum goes from rising to falling. That's a pivot. Or when it goes from falling to rising. That's a pivot. So let's take a look at the exact strategy, the rules for stop loss, take profit, break even for what I'm actually going to be doing the 100 back test results based on. Okay, so that way you can understand exactly what I'm testing, so you know what the results are. So let's just start over here. We'll go through a few examples. So we're looking for an upwards pivot because we have a green box, right? Daily momentum to the upside here. And so we get our move right here. You can see that our momentum pivots to the upside right there, goes from falling to rising. This candle close would be a trigger. Okay, so it's going to be this candle right here. So we have an entry there on this 4 hour right at that candle close, and then our stop loss goes to the low of that candle. Now, we're not going to be closing this trade unless price causes the momentum to then pivot to the downside again if it's a long trade. So that happens over here, right? So first we go 7.5 times in the trade's favor, and then we come back down. This one classifies as break even. So this is a break even trade for my testing purposes if price goes 1.5 times in the trade's favor. So 1.5 times risk in the trade's favor. That's going to be break even if price then comes back down and stops out the trade. So that's what happens there. We go 7.5 in the trade's favor, comes back down, pivot to the downside on our momentum right here. So it gets stopped out at break even. So that's how that one would be classified, just so you guys understand how I'm doing the testing. This one here, so we go red, we're looking for pivots to the downside. We get a pivot right here, first pivot to the downside. And this one is a loss. Okay, so classified as a loss. We come right back up, take out the high of that candle, so that's a loss. And then we get another pivot to the downside here. You can see on close this green candle, so we're entering into a short position there. And then we end up continuing down and down. We eventually end up going something like 20 times the risk in the trade's favor. But remember, for this strategy test purpose, we're waiting for a pivot to the upside to take profit, which would be this green candle right here. So closing out the trade right there at the close of that green, which would give us a 1 to 11.93. So this would be plus 11.93% for the testing purposes if risking 1% per trade. Okay, does that make sense? And I'll show the results for risking 1% per trade, 2% per trade, just so you guys can see the gain on the account figure. Then we get another one right here, trigger to the short side, pivot to the downside there, and this one's a loss. So you can see that price does wick up and take out the high of that trigger candle, and that's counted as a loss as far as my testing goes, okay? So even though some of these may look really good that are losses, just for this test, that's the rules that I'm showing and testing, so just so it makes sense, that's exactly what I'm testing. It's rigid rules, okay? And then we have this one here. We get another pivot to the downside. And we go down a little bit. We go down here. We don't quite make it to 1.5, so it's not break even yet. We pivot back to the upside on this red candle. So it's a small win. That's what it is. This one is 0.33, so it's a small win. If this was risking 1%, it made 0.33%, okay, for the gain on the account figure for testing purposes. Now here's another one. We get pivot to the downside. We do come to the downside. We go 3 times the risk in the trade's favor, or a bit less than that. Let's get this more perfect. 2.6 times the risk in the trade's favor. So we come back up. That's a break even for testing purposes. That's a break even. This one, tiny little win. We pivot back to the upside here on this candle, so we just close it out for the tiny little almost break even slight win. Come down here, this is a loss. Come back up here, this one short ends up being a little win, so 0.4 times the risk. Pivot back to the upside here on this green candle with the momentum on the 4-hour. Okay, and then we get another trigger here to the downside, and this one ends up working out really nicely. So we again stop loss to the high of that trigger candle, entering at the close of it, and then going until our momentum shifts back to the upside, which happens on this green candle right here. So it ends up being a 1 to 8 risk to reward ratio. So it does go all the way in the trade's favor by about 16.5 times the risk. But for the testing purpose, as I've been saying, just going to be using a rigid rule like this just for the test to keep things very objective, so there's no subjectivity to it. And so that is how the test is going to be done. Hopefully it's making sense. This one, loss. This one, small win. Pivot to the upside. That's the entry candle. We enter on close. Momentum comes back down on this one here, so we take a small win, then we enter again. This one ended up being a winner as well, so we pivot back to the downside. Looks like somewhere over here. Yeah, like that right here. Pivot back to the downside, or is it over here? Or it's right, let's see. Here, this candle here. Don't know what this green arrow is doing. So this one right here ends up being a 1 to 1.6 risk to reward ratio. Just take the profit on that. So that is how the strategy is done. Hopefully it's all making sense. We don't get any signals in here. So we come to the downside. We never pivot to the downside though. And then there's a couple extra trades over here. So you can see a small win. There's a loss right here, break even or a small win on this one. So that's what I'm testing. I'll show all the results now. So I did the 100 tests. You can see I have all these risk to reward ratio tools just laid out across all of this because I took every single signal, tested it, and calculated what the actual gain on the account would be, assuming you took every one of the last 100 trade signals. Okay, so let's go over those results. All right, so the results are in. Here they are. We're going to cover all the details and also talk about some ways that you can go about changing this for the better or for your liking. So it doesn't have to be daily down to 4 hour. It could be a triple screen method where you go weekly confirmation, daily confirmation, 4 hour trigger. So you have those two layers of higher time frames, making sure both those are lining up before getting to our 4 hour trigger, or even going daily to 4 hour to 1 hour, or 4 hour to 1 hour to 15 minutes, something like that. So you can modify this how you want, change the profit taking method, change the stop loss method. But anyway, before getting into all that stuff, let's take a look here. So time frame. So it's multi-time frame, daily filter, 4 hour trigger. And as I was just saying, you could go weekly filter, daily filter, 4 hour trigger for a triple screen method, or daily filter, 4 hour filter, 1 hour trigger, something like that. This was tested on Bitcoin. Risk to reward ratio was variable. So we had that break even stop loss at 1 to 1.5, and then the opposite pivot for profit taking. Time for 100 trades was 220 days. Winners, 41. Losses, 41. Break even, 18. Okay, so winners, some are huge, some are small, some are medium. Losses, some are, or the most they could be is just the 1% or 2%, depending on how much you risk per trade. But a lot of them are much less than that because it gets stopped out with a very small loss, not even reaching the profit target because the pivot in the opposite direction happens. So you close the trade right away with a tiny little loss, or sometimes with a small win. So that's what we'll see down here when I talk about the average win, average loss. But anyway, gain on the account, risking 2% per trade for the 100 trades, 197.04%, or risking 1%, 98.52%. So this is the most profitable strategy that I have tested by a long shot on the strategy ranking spreadsheet. And that's without any improvement. So this is really promising, this system. Definitely something you want to take a look at and play around with. Definitely worth looking into, trying to improve and modify how you see fit. So average win, 3.22%, risking 1%. So just double it. If you risk 2%, then it's 6.44. And then average loss, 0.817. So it's not just average loss of minus 1% risk, because some of the losses don't make it to the full stop loss. Sometimes it's just halfway there, and then we get a pivot in the opposite direction and the trade is closed with just half of the loss. So average loss, 0.81%. Average win, 3.22%. So average win much greater than the average loss, which is exactly what you want to see, especially when we have a 50% win rate here. And of course, some of those trades were huge risk to reward ratios, which can pad the results, but there were only a few with just these outrageous risk to reward ratios, like the one that there was only one that was 37 to 1, and then quite a lot of them were 4 times the risk, 5 times the risk, 8 times the risk, 6 times. I'm just reading off my list here. 2.5 times, 5.6, 1.75, 2.14, 12.22, 1.12, 0.65. So I'm just reading some of the winners, how it kind of varies, even as we get even ones that are 0.3, 0.1, 0.2. So there's a huge range of which ones that are winners and classified as winners that might be just small wins. And same thing goes with the losses. So there was a loss that was 0.1, 0.2, 0.1, 0.7, 0.3, 0.6, 0.3, 0.7. So just reading off some of the losses that were not the full stop out, some of the wins that were all over the place. So, but the average is what matters, right? So we have that 3.2% average and that 0.8 average over a series of 100 trades. So this is worth taking a look at, doing some more testing. And so let's talk about the improvements. We'll even pop it up on the screen, show you what it would look like. So, all right, so taking a look at some improvements for this system. So as I said, this was kind of inspired by the triple screen trading system by Dr. Alexander Elder. So what we can do is make it a triple screen method where we have 2 layers of higher time frame filters. So here on the left, I have a weekly time frame. So middle, daily, and then trigger time frame, our 4-hour on the far right. So what we would do to utilize this triple screen method, improving results with the extra filter, is we only take trades where both our weekly momentum is going up and our daily momentum is going up while weekly is going up, and then we get a pivot to the upside on our 4-hour. Okay, and then for a bearish trade, momentum weekly is falling, daily is also falling at the same time, and then 4-hour gives us a trigger of a pivot to the downside. So that would be the bearish trigger. So that would be the triple screen method. Or we could do this. We could go daily to 4-hour in our middle here, and then we could go down to a 1-hour trigger. So just some ideas to work with here. So when you have daily momentum down, also 4-hour momentum has to be down. So it's kind of like a checklist. We're going through daily momentum, it's down. Okay, is our 4-hour momentum also down? And then if those answers are yes, we look to our 1-hour and we look for a pivot to the downside on our momentum for a trigger to entry. So you could also go like this. You could go, okay, this one is going to be a 4-hour. So this is our highest time frame, 4-hour, and then middle we go 1 hour for another filter, and then this one we go 15-minute. So you can do whatever combination that you want to try out, but just some ideas to add in an additional layer. So we look at first, 4-hour, is our 4-hour momentum down? Is it heading to the downside? Is our hourly also heading to the downside? Then we look to our 15 and say, okay, yes, they're both heading to the downside. Then we can look for a pivot to the downside on our 15 for an actual lower time frame entry trigger. And then, so that would be kind of different ways to go about doing the time frames, adding in an additional higher time frame layer as an entry or a confirmation for the filter. And then other things. So if we're talking stop loss, if you guys saw, a lot of the trades would just get barely wicked out right before huge moves in the trade's favor, and I just counted them as losses. But if you put a little tiny buffer above that candle, it would have taken out a lot of those losses that turn into big winners if they hadn't gotten stopped out. So that's one thing to take a look at and consider. Another thing would be, okay, we have these runners that go 20 times in the trade's favor, 7 times in the trade's favor, 8 times in the trade's favor, and then end up being stopped out at break even. So are you really going to let a trade go 8 times in your favor? In reality, you're going to let a trade go 8 times in your favor and then just get stopped out at break even for nothing. So with the system I tested, yes, that is the case. A lot of the trades that were break even ended up going 3 times, 4 times, 5 times, 6 times in the trade's favor before coming down and getting stopped out at break even. So having a method to take partial profits or put your stop into profit or something along those lines, just something to work with and figure out yourself, but things that you could do to improve this, okay? And then if you want to go for a wider stop as well, so maybe you're using, instead of just the candle that causes the pivot, you use a larger swing low or swing high, depending on the trade direction. Because a lot of the trades, if you look at just the signal where it's given and you zoom out a little, it's an amazing entry, but it gets stopped out. So looking at maybe a way you could do the stop loss where it's a little bit wider at a more defined previous swing high or swing low, might be the way to go there. Okay, so just some things to think about for improving, but also last thing for improvement could be the indicator itself. You never know. This one I like. I've been using this for a while. It's one of the Trade Pro exclusive indicators that Patreon members have access to, but you can go ahead and use something else, just any momentum indicator that has pivots, which they all do. So maybe try the MACD, maybe try the RSI, maybe try stochastic, a smooth change of settings on your stochastic RSI, something like that. You can mess around with it and see what works well. Okay, so have fun with all the testing. I've given a lot of ideas for things to try out and improve the results. So really implore you guys to go and chase it, get after it, do some testing. But hopefully this gave you guys some good ideas about filtering trades. Oh, I just remembered one last thing with the ideas. EMAs, daily 200 EMA, 4-hour 50 EMA, things that you can just filter the trend direction with on a multi-time frame perspective is going to be helpful. So not only the momentum, but also a price-based indication like a moving average, where maybe our momentum is showing one thing, but then our price is over the daily 200 EMA and we have momentum going down. Do we necessarily want to be shorting when price is over the daily 200 EMA? It depends on who you are. So I don't know. You answer it yourself based on your preference, but just some ideas that I'm throwing out there. Anyway, thanks you guys for watching. Another long video, not quite as long as yesterday's. Watch yesterday's video if you want to see more examples with the system I showed. Check out my affiliates. If you want to trade crypto and you aren't able to use most exchanges, Bitunix has assured me they are allowing US customers no VPN, no KYC needed. So check out my little event that they set me up with there. And then also BingX has an event as well. Thanks guys for watching and have a great day.